Bismillahirrahmanirrahim. Any queries till now?
No, ma'am.
Today we are going to do a new chapter. We did criminal and fraudulent activities. Ali, did you see the recording of the yesterday's class? Fraudulent and criminal behavior. We have completed this chapter. Okay. Today we shall do this chapter, solvency and administration. Now, what is the difference between insolvency and solvency? Can you tell me? What do you mean
Solvency is
when we,
clarity.
what do you mean when you hear the word solvent, a company is solvent, and what do you mean when you hear the word insolvent?
Solvent, that it can, like, if the company wants to wind up or give their debts back or anything like that. So it's very smooth. They have the assets. And insolvent means that maybe they are not, the liquidity ratio is not that strong.
Okay, hold on to this. Ali, do you have any idea? If your mic is not working, you can type on the chat box. Do you have any idea what is the meaning of solvent and insolvent? Okay, explain. What is solvent? Okay. All right. Just hold on to this concept and let's proceed. What is liquidation? Kinza, please read.
Liquidation is the dissolution or winding up of a company.
That means when I say that a company is going through the process of liquidation, what does it mean? Yes, Kinza?
That means that whenever we are just winding up the company, we need assets. We need those assets which we can sell, and then we can later pay our debts and give the rest to the our shareholders. So to
Exactly.
the liquidation means this flow of the cash.
Exactly. Dissolution or winding up. ये नौबत कब आती है?
When there's a dissolution, we are ending up the company.
When we are short of money, when the company is short of money, then it decides to wind up. Or when the objective is achieved, when the objective to create the company is achieved, so it decides that okay, now I can shut it down. Or somebody,
Or when we are not no more in demand, when the product is not in demand anymore, sometimes the company is also dissolution.
outsider factors. Now, outsider factors can include what you just said, that maybe there is no demand of the product, that particular product has gone obsolete. For example, if you remember those dialer phones that every home used to have, the ping, 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 hello, ring, ring, right? So that those where did those companies go? Where did those companies go? They used to manufacture such phones, but they have disappeared. Next,
And typewriters. There used to be typewriters.
Alarm clocks. They have all vanished. They have become obsolete. So when they are obsolete, these type the companies shut down. Okay. So outsider factors. Other outsider factor could be that you have taken loan from the bank and you are unable to pay back the loan on time. So the bank might take action, might sue you in the court. and the court might decide.
But that
what
will
to
come
do.
in short of money, right? Not the
That,
outsider
no.
factors.
See, outsider factors, other people, the outside people are forcing your company to shut down.
Okay,
You will
okay.
never go and say that I'm short of money.
I thought the market issues.
Will you ever go and announce to your bank or to the any outsider that I'm short of money, I will not be able to pay your loan back? Nobody ever does that. Short of money when they don't have money inside the business to run the company's day-to-day routine activities. So what do they do if they don't have money to get the raw material? Right? So how can they manufacture that particular day? So they are short of money. And when the objective is achieved, the company has fulfilled its objective, the goal, they are ready to shut down. Outsider factors, any outsider has sued your company, or as you said that your product has gone obsolete, nobody uses these days, so there is no other option but to shut down. Okay, Ji. Let's move ahead. Who decides to liquidate? Who decides to liquidate? Ali, do you have voice now?
Yes, ma'am.
Yes, please read.
There are different methods of liquidation: compulsory, member, voluntarily, and creditors. Compulsory liquidation and creditors voluntary liquidation are proceeding for insolvent companies and members. Voluntary liquidation is for solvent companies.
Okay. So there are three different methods of liquidation. What are those three methods? Number one,
Compulsory,
compulsory liquidation.
Compulsory.
Compulsory liquidation. Number two, members voluntary liquidation. Members voluntary liquidation. Number three, creditors voluntary liquidation. Creditors voluntary liquidation. So first, compulsory. What are they saying? Compulsory and creditors voluntary liquidations are proceedings for insolvent companies. कोई जबरदस्ती आपकी कंपनी को बंद करवाए या क्रेडिटर्स आके शोर मचाएं और सू कर दें कोर्ट में और जबरदस्ती बंद करवाएं, तो दैट इज फॉर व्हिच टाइप ऑफ कंपनीज? इंसॉल्वेंट कंपनीज. The second, members voluntary liquidation is for solvent companies. Now, through this statement, can you tell me what could insolvent mean and what could solvent mean? All right, I'll just give you a hint. Over here, the word is used creditor and compulsory. Okay, some outsider is coming and forcing your company to shut down. आके ताला लगा रहे हैं, कोर्ट का दरवाजा खटखटा रहे हैं. तुम्हें क्या लगता है किस सिचुएशन में वो ऐसा करेगा? कोई भी बाहर वाले को
ma'am,
शौक तो नहीं है ना ऐसा
when you
करने
are
का.
unable to pay their
Bankrupt.
debts.
When you are
When you're
unable to pay,
bankrupt.
when you are unable to pay, time has gone, deadlines have passed, and you are still not paying, and you're not even giving any satisfactory answer कि हाँ हाँ एक महीने का टाइम दो, दे देंगे एक महीने का टाइम दो, और वो देते चले जा रहे हैं टाइम और वो लेता चला जा रहा है और अभी तक एक फूटी कौड़ी भी वापस नहीं. तो फॉर इंसॉल्वेंट इस सब से क्या समझ आ रहा है? दैट द कंपनी हैज गॉन बैंकरप्ट. The company literally doesn't have cash, that's why it's unable to pay. It's becoming insolvent. Whereas members voluntary liquidation, the members of the company, they themselves decide by their own choice that it's time to liquidate. So what do you think could be the situation? Could the situation be only that they are short of money, or could there be any other reasons as well?
No, there can be any other reason. The company is no more profitable, or maybe the things the main product is absolute now.
Right.
There can be other factors.
Right. So here solvent would mean that the company is running, they have the cash to run the company for the upcoming year, but they want to liquidate. Okay, so that's solvent. So the parties who are most likely involved in the decision to liquidate are who, Ali? The parties who are most likely to liquidate, who are they?
Members,
Directors, creditors, members. Okay, directors, creditors, members. These parties are the possible parties who can decide to get the company into liquidation. Okay. Now, when the member is voluntarily winding up, it would be solvent company. And when the creditor is voluntarily winding up, then the company would be insolvent company. This is very important, very important. You must not get confused here and you must remember this fact. Okay. Next, role of the liquidator. What is the role of the liquidator? Yes, Ali, please read.
once the decision is to liquidate has been taken, the company goes under the control of liquidator, who must be a qualified or authorized insolvency practitioner.
Exactly.
Although the liquidator's main role is to wind up the company, they have a statutory duty to report the Secretary of State where they feel the director of insolvent company is unfit to be involved in the management of a company.
क्या कह
Means this the director select a person who liquidate the company, and then if the liquidator is not qualified, then he can change it.
Right. So the liquidator is the person who is a professional, and what's his task? His task is to get the company liquidated. He is authorized, number one. He has to be qualified, number two. And he has to be a practitioner. That means an expert or a professional in his field, because it's not a joke to wind up a company. If you do not wind up a company wisely, what could be the after effects? Ali, what could
Sorry,
be the
ma'am.
possible after effects if you are unable to wind up the company, liquidate the company wisely?
Then you can have an additional loss. You can bear that as well.
Additional loss, most probably if you sell off this company, you might earn 10 million, but because you are not an expert and you have no idea and you lack experience, what you do, you sell a 10 million worth company for 5 million only. So there's a loss of 5 million which could have been recovered and which could have been used to pay off the debts, right? But because of the inexpertise, because of the lack of experience of the liquidator, this would happen. Okay, so that's why it's absolutely essential that your liquidator must be authorized, qualified, and a practitioner, an expert. Common features of liquidation. What are the common features of liquidation? Kinza, please read.
Once insolvency procedures have commenced, trading must cease. The company documents must state that the company is in liquidation and the director's power to manage ceases. Now, once we have decided the procedure has been started, now we have to make it publicly. We are supposed to officially announce that we are no more operating this company. So, and we won't be doing any business on this company's name.
And once insolvency procedures have commenced, share trading must cease. That means no more shares. Once it is announced that this company is insolvent and it is going through a liquidation process, the share market dealings and all other kinds of dealings should cease, should stop. No more dealings in the market as if it never existed. Okay, next. Please continue to read.
Regardless of what method of liquidation is used, similar legal problems may arise in each of them. In addition, the following factors are true at the state of any liquidation. No shares dealings or changes in members are allowed. All company documents, for example, invoices, letters, emails, and and the website must state the company is in liquidation. The director's power to manage ceases.
So I hope these points are clear. No share dealings. All company documents must state that the company has gone into liquidation process, and the third, director's power also ceases. That means during the liquidation process, the director of the company is no more a director. He cannot take decisions. Only the liquidator has the authority. The liquidator can take decisions, and the directors and other employees of the company must cooperate with the liquidator to give the relevant information, to give the details, to make sure that the liquidator has all the desired information he needs to carry out the process, all the desired accounts he needs that to carry out the process.
Ma'am, what
Voluntary
is mean by power to manage ceases? I didn't get this.
power to manage ceases. The director's power to manage what? Manage the company, to rule the company, to take decisions of the company.
Means ceases means he can stop the seizing process or something else.
No.
Winding up process.
His post as a director in the company has ceased, has stopped. He cannot act as a director anymore. He cannot perform his duties as a director anymore.
Okay, okay.
Next, voluntary liquidation. Ali, read. Ali, please read voluntary liquidation. I can't hear you, you're mute.
Starting. Can you hear me?
Now
Okay.
I can.
Voluntarily, a winding up is voluntarily where the wind up is taken by the company's member. Company is insolvent. The creditor is involved in the proceeding. As we saw earlier, there were two types of voluntary liquidation. A member's voluntarily winding up, where the company is solvent, and member merely decided to kill it. Uh, a creditor voluntarily wind up, where the company is insolvent, and the member resolves to wind up in consultation with the creditors.
Right. So here is it clear? Winding up, if it is voluntary, it can be done in two ways. Number one, a member's voluntary winding up. Number two, creditors' voluntary winding up. In members' voluntary winding up, the members of the company are deciding we should shut it down. And it's not necessary that company has to be insolvent for this decision. It can be solvent as well. Number two, creditors voluntary winding up, where the company has become insolvent and the creditors, the outsiders, have decided to go to the court, get their case filed, and make sure that the company is wound up and their money is given back to them. Now, the main differences between members and creditors voluntary winding up is here. The first difference, appointment of liquidator. How you are going to appoint a liquidator for members voluntary? Members are going to do it. How are you going to do it for creditors voluntary? They would be nominated by members, but approval has to be given by the creditors. The creditors would be the boss in this case. They would be deciding for the appointment of the liquidator. If they are not satisfied with the nomination, they can choose somebody else. Approval for liquidators actions. Liquidators actions, who will be approving it? Members in the general meeting. But over here, it will be the liquidation committee. Okay. Next, liquidation committee. In the members voluntary, there is no liquidation committee available. But over here, creditors voluntary, they have to have at least 5 representatives of creditors. That's how the liquidation committee is formed.
Are they from inside the company or they are from somewhere outside?
Creditors. Creditors.
No, I'm talking about the liquidation committee. The members of the committee, are they from somewhere outside or inside the company?
It depends upon the choice of the creditors. If they feel fit somebody to nominate who is inside the company, they will do it. If they feel somebody else fit who is outside the company, they will do it. It's up to them. It's their decision. Okay. Because representative means what? Those people would be
To represent
selected
it.
who would be representing the creditors. It could be even possible that like there are, for example, 20 creditors of the company who have filed the case in the court. So the committee, out of these 20, they might choose 5 out of them only, that okay, you go represent our case. So this 5 people could be out of these 20. These 5 people will be the most trustworthy people whom the creditors trust upon. Whom the creditors trust upon. Because who is going to put forward their case? Who is going to make sure that when the winding up is done, the liquidation is going through, each of them is getting back their money, or each of them is getting back on a fair basis. It is highly possible that the creditors, for example, have given a loan of, for example, 50 million to the company. But after selling off the company, they can only recover 20 million. Possible?
Yes.
So what will happen of this 20 million means these 5 people, the committee will ensure that this means it is done fairly. The liquidation process is being done fairly on a fair basis. Nobody is fooling the liquidator. The liquidator is not fooling the committee, and both are being fair to each other and open and transparent. And then they are also going to ensure that the liquidator is distributing this 20 million between this 20 creditors on a fair basis.
Okay.
So that's the function of a liquidation committee. Next, members voluntary liquidation. Kinza, read.
In order to be a member winding up, the director must make a declaration of solvency. It is a criminal offense to make a declaration of solvency without reasonable grounds. Just like you told earlier that we cannot just simply close the business without any reasons. We have to tell them that this was actually the reason, and we were out of cash, or maybe that product is no more in demand, or whatever the reason is. We have to state the reason. We can't just close the running company.
Exactly. Declaration of solvency is must. Is must. That means that they are not short of cash, but there are other reasonable grounds to shut down the company. Type of resolution to be passed. They can pass ordinary resolution. They can pass special resolution. What is ordinary? Please read.
This is a rare, but it is the article specific liquidation at a certain point. Only an ordinary resolution is required.
What
Special,
are articles? What are articles?
the small articles of the reasons, what the articles
No.
in the news.
Have you guys studied F1?
Yes.
What is an article
Yes.
of association?
Memorandum of the company where all the rules are written.
There are 2 very major documents of a company when it is formed: articles of association and memorandum of association. So what does this articles do? The articles have all the laws, rules, regulations, policies of the company. And memorandum has also some of the policies, but the major document, or like it is the constitution of the company. Constitution of the company. It is articles of association. So if the articles of association, and that articles is being referred to over here, that if this articles of association has any kind of policy or rule that once the objective is achieved, the company would be shut down, or maybe in the 5 years time we would shut down the company. The life of the company is for 10 years. Anything in the articles of association makes it easier for the members of the company to act accordingly. So then they would require only an ordinary resolution. Okay, next,
Okay.
special.
A company may resolve to be wound up by special resolution.
A company may resolve to be wound up by special resolution. What does that mean?
Now they have some special meaning, special reasons for winding up the company, not that the article is stating.
Ordinary resolution means you only need 50% of votes in the meeting. In the general meeting, in the annual general meeting, in the board meeting, you only need 50% votes and you're good to go with the, voluntary liquidation. But special Resolution means you need at least 75% of votes, and then only you can proceed with the liquidation. That is special resolution. Okay. Next, declaration of solvency. What should it include? So a voluntary winding up is a member's voluntary winding up only if the directors make and deliver to the registrar a declaration of solvency. To whom should they submit it? To the registrar. Why? Because when the company was born, then also they submitted what? Incorporation certificate. Do you know what is incorporation certificate? Ali, what is incorporation certificate?
No idea.
It is a birth
I think after
certificate
the
of the
contract,
company. It is the birth certificate of a company. You guys have not studied F1 thoroughly, I think. This is the birth certificate of a company. And this has been submitted to the registrar when the company was born. So the same way when you want to kill the company or the company has to die, then the declaration of insolvency has to be submitted to the registrar. Now, this is a statutory declaration that the directors have made full inquiry into the affairs of the company and are of the opinion that it will be able to pay its debts. Means तसल्ली इस बात की है कि debts pay करेंगे और debts pay कर सकते हैं. They are not short of cash within a specified period for not exceeding 12 months. मतलब वो within 12 months, within a year अपने तमाम debts they can pay off. That is what we mean by a solvent company. It has enough cash to pay off the debts of its debtors, creditors. Okay.
and
So-
why in 12 months? Why not now? The company is not running anyway. The business is not running anyway. So
No, no.
where from
the
where
period,
will they
the
get the money?
period should not exceed 12 months. 1 year से ज़्यादा exceed नहीं करना चाहिए. यानी they are able to pay back within 1 year.
Okay.
Okay. And why, if you ask me why, it is very logical. Why? Because nobody knows the future. Future is uncertain. But within a year is a reasonable future. कि इस साल के
Yeah,
अंदर
because
अंदर
they'll
हम
be
pay off
selling
कर
up all
सकते
the
हैं.
assets and yeah, then they
Right?
will get the money back. Okay.
Even the going concern concept. Have you heard of the going concern concept?
Yeah.
The going concern concept of a company, this is an accounting concept which says that you have to state in the financial statements that whether the company is going concern or not. What does it mean?
That it will be continued or later on it will stop.
That
So we have to
it is
assume that the
healthy enough.
company
It is
yeah,
healthy
to
enough.
continue in future.
Company is healthy enough to continue business for the upcoming year, 1 year, to stay alive for the 1 year. It is healthy enough. So that is the going concern concept. So now the declaration is made by all the directors, or there are more than 2 directors by a majority of them. Okay. So या तो सारे directors इस declaration पे साइन करेंगे या फिर कम से कम 2 से ज्यादा होने चाहिए, majority होनी चाहिए, depending upon whether it is an ordinary resolution or special resolution. अगर ordinary है तो 50% होने चाहिए और अगर special resolution है तो 75%.
75.
Next, the declaration includes a statement of the company's assets and liabilities as at the latest practicable date before the declaration is made. Is this clear that you have to also submit a statement of company's assets and liabilities along with the declaration of solvency? And the declaration must be made not more than 5 weeks before the resolution to wind up is passed and delivered to the registrar within 15 days after the meeting. So these are the facts that you have to learn. Okay. Resolution, for example, आज की तारीख में resolution pass कर दिया गया है. So now it should not take more than 5 weeks to submit it to the registrar or to get to the registrar, and registrar को भी within 15 days after the meeting आपको deliver करना है अपने ये दोनों documents, declaration and your statement of assets and liabilities. Okay. Kinza, please read this.
It is a criminal offense published by punishable by fine or imprisonment for a director to make a declaration of solvency without having reasonable grounds for it. If the company proves to be insolvent, they will have to justify their previous declaration or be punished. This is the same thing, I think, what we just read.
It is an offense if the director is falsely giving the declaration that the company is solvent and बाद में पता चलता है कि ये तो insolvent है. ठीक है, so and they don't have any other reasonable grounds to shut down the company, so it is punishable by law. Next, Ali, please read. In members voluntary winding up.
In members voluntarily winding up, the creditors play no part since the assumption is that their debt will be paid in full. The liquidator calls a special and annual general meeting of contributors to whom they report. A. Within 3 months after each anniversary of the commencement of winding up, the liquidator must call a meeting before it is an account of their transaction during the year. And B. When the liquidation is complete, the liquidator calls a meeting to lay before its final accounts.
All right, I hope this is clear. Next, creditors voluntary liquidation. Now, in this, what is going to happen? There is no declaration of solvency. Why? Because the creditors are forcing the company. Creditors want it to be wound up. To commence, please note, to commence a creditor's voluntary winding up, the directors convene a general meeting of members to pass a special resolution. Special means 75% majority. To nominate a liquidator and establish a liquidation committee. Creditor approval for the choice of liquidator is then sought. This is obtained either through the deemed consent procedure, where less than 10% of creditors object to nominee, or by hosting a virtual online meeting for a vote. However, creditors are entitled to request a meeting if they wish. The decision of the creditors on the nomination of liquidator must be received after 3 working days following delivery of the notice, but within 14 working days of resolution to wind up the company. Anything which is unclear? These are all facts which you have to learn. There is nothing to explain.
Yeah.
Clear.
And these are the things which they have to follow
Yes,
in the process
these are the
of liquidation.
policies, these are the rules. Now, what is center binding? Kinza.
In the past, the member's nominee of liquidator has been exploited for the purpose known as center binding.
In the past, the member's nominee, that means the nominator or the nominee that has been chosen by the members, has exploited, which is known as center binding. Now, what is that? Let's see. First, we will be going through the case. What is the case? The facts. Kinza, please continue.
The directors convened a general meeting without making a statutory declaration of solvency, but failed to call a creditors meeting or the same or the next day. The penalty for this was merely a small default fine. The liquidator chosen by the member had disposed of the assets before the creditors could appoint a liquidator. The liquidator challenged the sale of the assets at a low price as invalid. Decision. The first liquidator had been in office when he made the sale, and so it was a valid exercise of the normal power of sale.
क्या कह रहे हैं? क्या समझ आ रही है?
It's a bit confusing. A lot.
Okay. Okay. The directors convened a general meeting. एक general meeting होती है किसकी? Directors की. Without making a statutory declaration of solvency, और अभी तक इन्होंने registrar को कोई notice नहीं भेजा declaration of solvency का, but failed to call a creditors meeting for the same or the next day. अब अगर इन्होंने declaration registrar को नहीं भेजा है तो उसका क्या मतलब है जिनका?
The process has not been started yet.
No, that means they don't think that the company is solvent. Because
Yeah.
they can't start without
They
the
have not
declaration of
started
solvency.
exactly.
So that means
They
it
have
is
not made up their final mind that they will be solving it. They will be closing up the company.
No, they have made up the mind to close the company. and they have not sent the declaration of solvency to the registrar, which means it is insolvent. And when it is insolvent, then it is not members voluntary liquidation. It is what? It is creditors voluntary liquidation.
Oh,
Are you
yes.
getting the
Oh,
point?
okay. Now I get. Yeah. Now I got the point.
Okay.
Okay.
Now, what happened? They have not submitted this to the registrar, and they have not even called the creditors when they should have.
Okay, yes.
Now, the
Because the
penalty,
creditors will be deciding that what should be done, and they will be deciding the company members committee,
the liquidator.
the liquidator. Yeah.
So the penalty for this was merely a small default fine. Okay. The liquidator
Yeah.
chosen by members had disposed of the assets before the creditors could appoint a liquidator. हुआ ये कि
Okay.
मेंबर्स ने अपॉइंट कर लिया लिक्विडेटर, उन्होंने तो क्रेडिटर्स को
Hmm.
बुलाया भी नहीं, उनको तो तौफीक ही
Exactly.
नहीं हुई, उसका
और
उन्होंने
अपने टर्म्स पे एग्जैक्टली उन्होंने सेल आउट भी स्टार्ट
सेल
कर
आउट
दिया
कर
चीजों
दिया।
को।
अब क्रेडिटर
Yeah.
का लिक्विडेटर बाद में भागा 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 आया और उसने देखा ये तो एसेट्स उन्होंने बेच दिए। अब वो चैलेंज
Exactly.
कर रहे हैं कि भाई तुम लोग ने तो एसेट बहुत सस्ते में बेच दिए और ये फेयर नहीं है, तुम लोगों ने गलत तरीका अपनाया है। तब
बिल्कुल।
डिसीजन क्या आया, कोर्ट की तरफ से फैसला क्या आया? The first liquidator had been in office when he made the sale, and so it was a valid exercise of the normal power to sale. यानी liquidator का कोई कसूर नहीं है, उसको हायर अपॉइंट किया गया था and उसने अपनी ड्यूटी निभाई। अब वो जैसे भी निभाई, जो भी निभाई, he has fulfilled his duty and another person cannot come and challenge.
या लिक्विडेटर का तो नहीं था, बट ऑन द अदर हैंड डायरेक्टर्स का तो होगा ना।
Yeah.
They were actually challenging the liquidator, not the directors of the company.
See, there are two teams. One are directors, who are also
Yeah.
known as members. One is a
Yeah.
creditor. By the first statement, it is clear that this is a creditor's
Yeah,
voluntary
exactly. So the authority should be with the creditors.
Yes, it should be with the
But the
creditors,
director
but they
did
did
not
not
give
call.
the authority.
They did not
Yeah,
call
to
the
the
creditor. So
Yeah.
what were they done? They had to pay a fine for it. That why didn't they
That's
inform
right.
the creditor? Why didn't they
Yeah.
call the meeting? So the directors paid the fine. But what had directors done? They had already called upon a liquidator, appointed a liquidator, and they
Yeah,
had
who
told
was
him
solving
to,
out the issue.
and he fulfilled his duties. He sold the assets
Yeah.
of the company.
Yeah.
Now the creditors also chose a liquidator. Yes or no? Because as
Yes.
per the
Okay.
For the
For the law,
creditors,
exactly. They are the one who were supposed to choose the liquidator.
as per the creditors voluntary liquidation, they are the ones to
Yeah.
choose the liquidator. And now this liquidator comes and says that no, he performed poorly.
Okay. Okay. So
Okay?
actually, the decision is saying you cannot blame the liquidator because he is not the one to blame, because
Yes,
that was his duty and he was doing his job.
Next, please read. Ali, please read from your inner center binding
Okay.
transaction.
Okay, in center binding transaction, the assets are sold on obligating liquidator to a new company formed by the member of the insolvent company. The purpose is to defeat claims of the creditor at minimum cost and enable the same people to continue in business until the next solvency supervises.
Now, what is
Supervences.
wait, hold on. Now, what is this center binding transaction? What do you think you understood by this paragraph? Ali.
It means like to sell the things at their best price, I guess.
Okay, now center binding transaction, what is happening? Please listen carefully. Please listen carefully. Here. Company A. Okay. Company A has become insolvent and they need to sell off the assets. Now, in this particular case, if you refer to this particular case, what has happened? Company A directors have already sold the assets. They have appointed the liquidator, and through the liquidator, they have sold the assets. What have they done? They have sold the assets to company B. They have sold the assets to company B at a minimum price. Now here they are playing a game, if you can understand. This company B belongs to the same directors. They have
Oh.
started a new company, company B. Once they found that this company, they cannot proceed with this company. So they have created a new company. They sell off the assets of this company to this company from A to B and at a minimum price. So minimum price, when they sell off at minimum price, this minimum price will be distributed to whom? The creditors.
Shareholders. Yeah. The creditors. Yeah.
And the assets remain with them. Okay, and they shall continue. So can you see how they are playing the game? This is known as a center binding transaction.
Okay. It's kind of a win-win situation.
Win-win situation.
That they are also getting rid of the creditors, they're just making them happy, and on the other hand, they're not even losing their assets.
So now what the government has done, it has sought to limit the abuses during the period between the members and creditors meetings. The powers of the members nominee as a liquidator are now restricted to taking control of the company's property, disposing of perishable or other goods which might diminish in value if not disposed of immediately, and doing all other things necessary for the protection of the company's assets. So these are some of the actions which have been taken by the government in order to limit the how much the directors can abuse in this as well, in this setting as well. So if the members liquidator wishes to perform any act other than those listed above, they will have to apply to the court for leave. So these are the only acts which they can perform. They can either control the company's property, they can dispose perishable or other goods which might diminish in value if not disposed of immediately, and doing all other things necessary for the protection of the company's assets. Now, moving ahead with compulsory liquidation. What is compulsory liquidation? Kinza, read.
There are 7 statutory reasons for the compulsory liquidation of a company, which can all be found in the Insolvency Act 1986.
Right. So there is
There
a
are
proper
7
law, there is a proper law, there is a proper act, Insolvency Act 1986, which gives us 7 reasons, 7 statutory reasons to shut down the company or to liquidate the company compulsory in a very compulsive way. So the first one is company is unable to pay its debts. The second one is it is just and equitable to wind the company. These are the 2 most important ones. And the rest, let's see. The government may petition for compulsory winding up of a company if a public company has not obtained a trading certificate within 1 year of incorporation. This is for public company, that if it has not acquired a trading certificate apart from the incorporation certificate within 1 year, it can be shut down. It is equally important to get a trading certificate for whom? For a public company. For whom, Kinza?
for the public company.
For the
Only
public.
then they can trade after getting the certificate.
Yes. The second, following a report by government inspectors that it is in the public interest and just and equitable for the company to be wound up. Now, can you mention any possible reasons behind this? Like, what could be those reasons which are in public interest and just and
Like
equitable?
sometimes if I'm having a tobacco company and then later I realize, no, I think that should be done, or maybe my my industry is making up a lot of pollution. So maybe that's why it's in the public interest. So I'm just winding up my
Right. Maybe that company is creating a threat to the environment. Maybe that company is, involved in some illegal activities like terrorist activities or, making bombs or something like that in a hidden way. Maybe the company is creating some kind of products which are very, very unhealthy for the public. So all of this could be the possible reasons for the government to take action and shut down the company in compulsion. Company unable to pay its debts. Ali.
Company unable to pay the tax. A creditor may apply to the court to wind up the company if the company is unable to pay its debt. They are statutory tasked to prove the company is unable to pay its debt. A creditor who petitions on the ground of the company's insolvency must show that the company is unable to pay its debts. There are three permitted ways to do that. A. The creditor owned more than £750, serve the company at registered office, written demand for the payment of the company fails to pay the debt, or to the security for within 21 days. If the company denies it owes amount demanded on apparently reasonable ground, the court will dismiss the petition and leave the creditor to take legal proceeding for debts. Shall I read further?
Second, yes.
Second, a creditor obtains judgment against the company for debts and attempts to enforce the judgment. However, they are unable to obtain payment because no assets of the company have been found or seized. C. C. A creditor satisfied the court that taking into account the contingent and prospective liabilities of the companies, it is unable to pay its debt. The creditor may show one of the two ways: by proof the company is not able to pay the debts, the commercial insolvency test; by proof that the company's assets are less than its liabilities, the balance sheet test. This is a residual category. Any evidence of the actual or prospective insolvency may be produced.
Right. So, what did you understand? One by one, please explain. Point A, Vincent.
Point A again says that we have to give proper reasons why we are closing up the companies, and we have to follow specific rules that within maybe 21 days or whatever the rules are, we need to follow.
Creditor has owned more than £750 and he has given a written request that I want my payment back, and the company fails to pay. Either the company fails or it says it can't even give any surety that okay, give us a month's time or 21 days time or something like that. Next, Ali, explain the second point.
A creditor obtains judgment against the company for the debt that have been seized. Uh, this means that he has not done any sufficient acts to have the company's assets seized.
Right. So a creditor obtains judgment against the company for debt and attempts to enforce the judgment. Means, of course, the creditor has to come up with the proof that this company has failed to pay my debt. Then only the court can take action. If without evidence, the court will not be able to take action. So, however, they are unable to obtain payment because no assets of the company have been found and seized. Of course, the creditor is not just going to enter the company and take the asset and sell it off. It's going to happen legally. Next, third point. Ali, explain.
Means a creditor satisfied the court that there are more assets than the liabilities and they can easily pay off their debts. There are two tests. One is commercial test and the second one is balance sheet. Balance sheet test is the same as I explained, and the commercial test means that they have sufficient like assets. You can say current assets.
No, ma'am, I think they have to prove that they have more liabilities than their assets. They are short of cash right now. They cannot pay, so they have to show their balance sheets and make them understand, convince them that see, we don't have the amount right now, but later we'll be paying the amount of something.
Right. Now the company can say that, okay, see, even if you sell off our assets, you won't be able to get back your money, not even half of it. It's not worth it. Give us some time. Let us work. Let us do some business. Give us some more time. We will pay you back. Because what's the point if you sell off right now and you only get 1/4 or even less than that of your total payment, right?
Yeah,
So
right.
creditor satisfies the code that taking into account the contingent and prospective liabilities of the company, it is unable to pay its debts. ये creditor अपना काम कर देते हैं, court को यकीन दिला देता है. Now the creditor may show this one of the two ways. Creditor बोल सकता है कि भाई by proof that the company is not able to pay its debt as a fault due date गुजर चुकी है, that is commercial insolvency test. इसको क्या कहते हैं? कमर्शियल इंसॉल्वेंसी टेस्ट के भैया कॉन्ट्रैक्ट था मेरा और कंपनी का, क्रेडिटर एक्स का और कंपनी ए का कॉन्ट्रैक्ट था, एंड द ड्यू डेट वाज 30th October 2022 and the due date has passed and it's 4th November and now one more month has passed, it's December. Oh, it can be even 2023 and they have failed to return the money. So commercial insolvency test, simple, the due date has passed and therefore it is unable, so I want to file a case against it. I want to make sure that it goes through liquidation. By proof that the company's assets are less than its liabilities, the balance sheet test. That means even if they don't have any contract which they have signed, they can show the balance sheet of the company and say that, see, the company's assets are less valuable than its liabilities and therefore they can't pay off. Because there is a rule of thumb in accountancy world, we say that जो भी आप कारोबार करो, your value of assets should be equal to the value of your capital plus liability. Yes, that's the equation that you might have studied in MA1, FA1 or F1. Assets is equals to capital plus liability. But when you can show that asset value is less and this value is more, so it is not in balance. That means they cannot pay back their liability. This is called the balance sheet test. Now, this is a residual category. Any evidence of actual or prospective insolvency may be produced. Okay, clear till here? Any queries?
Yes.
Any questions? Okay.
Not now.
The just and equitable ground. What is just and equitable ground? Kinza, read.
The just satisfied member may get the court to wind the company up on the just and equitable grounds. Now the
Yes.
member is not getting satisfied and he's asking the court to give the justice grounds and the reasons.
Yes, it may happen that a member who is dissatisfied with the directors or controlling shareholders over the management of the company may petition the court for the company to be wound up on just and equitable ground. He has to bring forward some kind of reason. Without reason, without a just and equitable reason, they cannot tell the court to take such a big action to wind up the company. Right? There has to be a powerful, logical reason. Now, examples when companies have been wound up. What are the examples? I would like you guys to go through these examples. There is 1, 2, and 3. Take 5 minutes, 10 minutes, go through the example, try to understand what they mean, and then come back and explain it to me. Okay, so your 5 minutes begin now. It's 12:07. I will be back 12 or 12:15. Okay, 12:15 we shall resume, read this and try to explain. Okay, guys, we are back.
Yes, ma'am.
Yes. पढ़ा क्या है पहले केस में क्या है? When companies have been knocked up. What's the first case?
Yes, ma'am. What I get from the first thing is the German date copy. Uh, a company was applying for the specific patent, and the German patent was not given to him for copy thing. So he got the Swedish patent for the sale in Germany, and member said that the company would wind up. He put the petition. So the company was came to end after his petition in the court.
Company existed only to work a particular patent, and as it could not do so, it should be wound up. So decision was in against the company, right? Because it could not get the patent for operating in the Germany legally. Okay. So I hope the first case is clear, Kinza. Is it clear to you?
Yes, ma'am. Yes.
Second case, Kinza, please explain.
Second case, they both are partners. They both were first sole traders and then they merged together and became partners. But later on, they refused. They had misunderstandings. They couldn't continue very well. So they just thought of winding up. So the case, the decision was made that it's okay if they are not compatible. So it should be winded up.
Right. Ali, do you agree with the explanation?
Yes, ma'am.
Do you agree with the explanation of Kinza?
Yes, ma'am.
Okay. Next case, Ali, please explain.
Let me just read it because it was not visible. ENN carried on business for 25 years, originally as a partner for the last 25 years, and they had 500 shares. ENN were the first directors as well, so they shared the profits and dividends, profits, where there no dividends were paid. Alston joined the business and become the third director. ENN has transferred 100 shares to Alston. Eventually, there was a dispute, and his sons and his son voting their control in a journal meeting. 600 posts against 400 to remove E from the directorship. Okay, and the decision was the company should be wound up, and his son. Okay, so there were two members. Basically, you can say two friends who like started the company, and then they had a dispute. But before the dispute, one member entered his son, injected his son into the company's directorship, and with his son's authority, he got major shares. And after the dispute, this the one with the son had the decision to wind up the company, and the other one like appeared in front of court, but the court said as per legal rights they can bond up the company.
Kinza, what did you understand?
Well, the first two of them were the partners, N and E. Then later on, Sun also joined in, and N and Sun became one party, and they were now against E. So actually, the legal right was yes, they can do it because their votes, they had more power, they can do whatever they want with E. But if you talk about ethical and equitable grounds, then it is not a good choice. So the court said that no, this cannot be done.
Exactly, because जब 25 साल तक ई चला रहे हैं business, तो 25 साल is not a joke, right? And suddenly out of nowhere के 25 साल के बाद वो पता नहीं उसने कुछ ऐसी चीज कर दी कि उसको निकालना पड़ा, right? So this doesn't sound right. So it's up to the court. It will look at the evidences and it can decide either way. It can go in favor or it can go in against it. Okay. All right. Now this is the fourth case. Kinza, did you go
Yeah,
through the
so
court
now,
case?
yes, I did.
Please
Actually,
explain.
now the problem is the same Ibrahim's case, just like we did earlier about the son. So now problem is the same, but now they're not having issues with the votes. They're having issues with the price, settlements, and minor stuffs, which I think can be sorted in other ways. So the court has now dismissed the case, and now the court is saying there is no use for liquidation. You can just sort out the issues yourself. So you cannot wind up the company this way.
Okay. So I hope these cases are making sense and making the law more relevant. Okay. Now, other circumstances for compulsory liquidation. What could be the other circumstances, Ali? Quickly.
Others, yes, ma'am.
The other circumstances for compulsory liquidation, quickly go through the points.
Shall I read?
Yes, yes.
The company's passed a special resolution that it should be wound up by the court. The company is registered as a public limited company more than a year previously that has not yet been issued with a trading certificate. The company is an old public company, existed before 1980 and has remained as PLC since. The company has not begun trading within a year of its incorporation and has suspended its trading for a whole year. The moratorium for a voluntary arrangement for a company has passed and no voluntary arrangement is in place.
Right. Okay. So these are the circumstances for compulsory liquidation. A company has passed special resolution. Number two, trading certificate has not been issued. Number three, it is an old public company, PLC is written, and it has become
So, ma'am,
obsolete.
is it like we cannot do it that way? That if it's a public company, then it has to change?
No, the company is an old public company. As you can see, that they have existed before 1980. It's so old.
Yeah.
So of course it has become obsolete and it needs to be shut down now, or maybe given a new
Okay.
name.
But there
Okay.
are several businesses like we talk about Bata, Ruafza. They've been working like from a lot of past years,
We
but
are studying UK law, right?
so we
So
cannot run an old business. We cannot run an old business. We have to change it, change the name.
you have to make things. You can renew things, right? Because definitely from 1980 and today it's 2023, laws and policies have changed so much. How is it possible that a company is running since then and there are no new company laws, no guidance from the government? There has been so many changes. So now that old company needs to either revive itself or shut down and make a new company, or maybe shift. Has to be some way out. Okay, there has to be some way out. And this is UK law, so I don't know in detail that what's the more detailing about this situation. You can search it. Okay, next. The company has not begun trading within a year of its incorporation or has suspended its trading for the whole year. मतलब start कर दिया है, नाम है, incorporation certificate है, जगह है, मगर they have not started their operations and a whole year has passed. Okay. Next, moratorium for a voluntary arrangement for the company has passed and no voluntary arrangement is in place. Moratorium for a voluntary arrangement for the company has passed and no voluntary arrangement is in place. That means voluntary arrangement, voluntary liquidation, it has been passed, but it has not started yet. So now somebody has to step into and make it liquidated on a compulsion. Okay. Next, proceedings for compulsory liquidation. What are the proceedings? How the compulsory liquidation will take place? What will be the effects for an order of compulsory liquidation? Investigations by the official receiver, meetings of contributories and creditors, order of payments on liquidation. Okay, now this is interesting. What would be the order of payments on liquidation? Once you are getting the money after liquidating, how you're going to distribute that money? First, you're going to take out all the cost of selling assets, the liquidator's remuneration, and the cost that has incurred to carry out the liquidation procedure. It could be the court fee, the lawyer fee, liquidator fee, the cost of selling the assets, so on and so forth. Second, you're going to pay off your preferential debts. What are preferential debts, Kinza? That means these.
Preferential,
Yes, say.
employee wages, accrued holiday pay, contributions to an occupational
Means
pension
ये तो
fund.
उनके ऊपर फर्ज है ना, ये तो उनकी
That's
ड्यूटी
because
थी
they
कि
are
वो पे
directly
करें,
related to the company.
right? This is their duty to pay off any any liability which is towards their employee, which is towards their occupational pension fund.
Yes.
Third, debts secured by floating charges. Debts secured by floating charges, what does that mean? What is a floating charge? What is a fixed charge?
Like
Floating
what we are
charge
doing,
means changes as per time, whereas the fixed charge is fixed percentage.
No. अच्छा होता क्या है when a company takes loan, okay, a company takes loan from someone. Now that someone could be Mr. X, that someone could be Mr. Y. They need a guarantee. They need a security that okay, we are issuing you a 5 million loan, but what is the guarantee that you're going to pay us back? We are just individuals and you're a huge organization. You have more power than us. So what does the company do? The company says, okay, I have this non-current asset. This in the contract we are writing that this current asset belongs to you unless we pay
it's like
back the loan.
we say girvi rakh diya, ghar girvi rakh
Yes,
diya. Yeah.
yes. So we will pay back to you and then you cannot take the asset. But if we do not pay back to you, then you can take the asset and sell it off. It's yours. Okay, that's fixed charge. Floating charge is done on current assets. Current assets could be your inventory, बहुत सारा माल रखा हुआ है जो आपको सेल करना है, that's your inventory basically. So the floating charge is usually on the current assets and on inventory, but they usually pay off if they take a floating charge. Fixed charge ज़्यादा बड़ी amounts के लिए दिया जाता है. So I hope you are understanding the word charge here means गिरवी रखवाना, you are giving some kind of a security.
Okay.
So the first, you are going to pay off your costs. Second, you are going to pay off any preferential debts. Third, you are going to pay off if any of your debts are secured. And especially first, fixed charge and second, floating charge. Secured debts would be paid off first. Then unsecured debts would be paid off fourth. Then deferred debts. These include dividends. These includes any interest which is not paid. And finally, to the members, the shareholders, the surplus is distributed amongst them. Okay, so I hope this criteria is clear. This prescribed order is clear.
Clear.
Yes, ma'am, clear. Okay. Then completion of compulsory liquidation. You examine the accounts. And then you finally, an official receiver may also apply to registrar for early dissolution of the company and give the report कि सब हमने wind up कर दिया है, pay off कर दिया है, पूरी report finally किसको दी जाएगी, registrar को. And now here are some differences between compulsory and voluntary liquidation that I expect you can go through yourself. Control, timing, liquidator, legal proceedings. It is all repetitive for what we have done. It is just the difference between the two. You must know it. Saving a company. What does saving a company mean? Saving a company means administration. That means you are not getting the company into liquidation, but you are taking the company into administration. Now, what is administration? It is a method of saving a company from liquidation under the Enterprise Act 2022. That means you are again putting up this issue in front of the creditors, in front of the members, and you're saying that Deco, the value of the asset is so less that it cannot even pay back your 1/4 of your loan, 1/4 of your money. So it's better you give us a chance, give us some more time to save this company, run it, and pay back your debt. आप इंटरेस्ट बढ़ा दो, आप इंटरेस्ट ऐड कर दो, do anything, but please do not wind up the company right now. Do not
Or
push us
maybe they
into
can
the
ask some
liquidation.
professional bodies to jump in and just guide them how what actions can they take.
Exactly. So that is administration, where the court decides, okay, एक और chance दिया जाए. Now in this process, the company is basically going through ICU. It is given special attention, it is given special care, it is court gives a special protection to this company and shuts the mouth of the media, of creditors, of shareholders. They shut up their mouths and they say, company, we are giving you in the hands of the expert doctor, and he is going to treat you for 1 year, one whole good year, and you are safe from the outsiders, and work hard and get back to your health, get back to your healthy state. Okay, so that is administration. An administrator is appointed primarily to try to rescue the company as a going concern. A company may go into administration to carry out an established plan to save the company. Okay, and administration puts an insolvency practitioner in control. Now see the liquidator. Who was the liquidator? He was also insolvency practitioner. And over here, who is the administrator? He is also an insolvency practitioner. But over there, the liquidator plays the role of a liquidator, whereas over here, this person, this insolvency practitioner will play the role of an administrator and will try to save the company. Okay, will try to bring it back as a going concern. Its purpose is to insulate the company from its creditors while it saves. That means insulate, that means the court is giving protection to the company from outside creditors, bank, government, shareholders, anyone.
All
who
the
is
other
against the
pressures what companies face.
Exactly. To save itself as a going concern, to achieve a better result, to realize property so as to make a distribution to creditors. Appointment without a court order. If there is an appointment without a court order, that means some parties, secured creditors and directors and members by resolution can appoint a administrator without a court order. That means without the involvement of the court, it is possible that the directors, members and the creditors decide together with a mutual understanding that they need an administrator. And so they can do it. Okay. So the three sets of people who might be able to do this are floating charge holders, directors, and the company. Now, who are floating charge holders?
Ma'am, what comes under the company? Like the difference between the director and the company?
Company
I didn't get it.
shareholders.
Okay, got it.
Okay. Now over here, floating charge holders, I have explained it to you. I would like you to read this thoroughly because it is essential for you to read it for your better understanding. Okay. Then company and directors have done this. Many things are repetitive over here, so I am not going through it, but I would love you to read it and I recommend you to read it. It is an important chapter. You cannot miss any reading part. Appointment with a court order. You can appoint an administration with the involvement of the court. Effects of appointing an administrator. Like if you hire or appoint an administrator, what could be the possible effects? Of course, there would be effects would be a moratorium over the company's debts commences. The court must give its permission for security over company property, because see the involvement of the court is essential. Why? Because it's okay with mutual understanding, you can go for it, you can go and appoint an administrator, but you still cannot control or stop the outside worldly pressure on you, right? It is only with the involvement of the court that would help you to come in the protective shield, under the protective shield of the court, and you can stop or avoid the media, the shareholder, any XYZ third person, any neighbors pressurizing you or your company, right?
Yeah.
So security over company property to be enforced, goods held under hire purchase to be repossessed, a landlord to conduct forfeiture by peaceable treaty. There are so many issues. इलेक्ट्रिसिटी का बिल
Yeah.
आ गया, अब वो भी पे करना है, तो वो आप कैसे रोकोगे?
Exactly.
आप कैसे दूसरों को रोकोगे? किस हद तक रोकोगे अकेले? यू नीड अ कोर्ट इंटरवेंशन, legal process against the company, powers of management, petitions for my winding up, administrative receiver, all of this. The duty of the administrator, you know the duties of the administrator. He acts as an agent plus some legal duties. He has to be loyal. He has to be an expert. He has to, for example, 1 year has passed and he is unable to save the company. So he must be able to put in front of the court the facts and the figures and what strategies he tried and how he could not save the company and what are the reasons that would any other administrator be able to save the company or not, or is it futile to try it again and again, whatever
So
it
he is
is.
also answerable.
Yes, he's answerable and he will answer. And for example, if the company within a year has got into a survival mode, okay, but it's the administrator says that I need more time to bring it into a profitable place so that it can, अपने पैरों पे खड़ा हो जाए और फिर खुद से करने लगे. तो उसके लिए at the end of the year he can request the court that please give me some more time to run the company, to administrate it, so that I can bring it into a
Is
profitable
it always
condition.
1 year or they just give random timings according to the
No,
company?
first it's 1 year. They give full 1 year for the administrator to look into the matters, investigate, apply strategies to it, run the company. He would be taking advice from the directors, but the sole decision power, he has that. He has that decision power. Okay. After a year, he can request for more time, or he can present a report and say, sorry, I could not save it, and nobody can save it. It's useless to work on it. ठीक है, कुछ भी जो भी report है, he is going to present. Administrators proposes as a rescue plan or company cannot be rescued. दो ही options है, या rescue कर किया जा सकता है या नहीं किया जा सकता. Okay, next, administrators powers. Okay, go through this. Remove or appoint a director. Call a meeting of members or directors. Apply to court for directions. Make payments to secured or preferential creditors. With the permission of the court, make payments to unsecured creditors. ये सारी उसकी powers हैं. इसकी administrator. End of administration 12 months. इससे ज्यादा एडमिनिस्ट्रेशन नहीं आता. आईसीयू में क्या आप सारी जिंदगी रहते हो या एक टाइम पीरियड के लिए रहते हो, right? So there has to be a limit to it. You cannot always stay in the ICU.
And there has to
ICU
be
is
a
there to help
deadline,
you.
so they also work honestly and they work hard.
Exactly.
Otherwise, they know they've got a nice job, so they will just continue with
Exactly.
it.
Now there are some advantages to administration. What do you think could be the benefits of administration rather than liquidation? Kimza.
Because they'll be having a very nice direction. They can tell. It's very easy when somebody is there to supervise, to tell you, because a third party can always see some points which we are not highlighting, and the professional bodies are always the best solution. So yeah.
Right. Ali.
They must have an experience, the sufficient experience, like
फायदा क्या है, बेनिफिट क्या है, एडमिनिस्ट्रेशन में क्यों डालना चाहिए, आईसीयू में कंपनी को क्यों भेजना चाहिए, व्हाई टेक अ चांस, व्हाई नॉट जस्ट वाइंड इट अप.
yeah, rather than winding it up. Shall I read?
Yes, no, don't read, you explain, you tell me what could be the possible reason, what could be the possible
For
benefits.
possibilities, like uh, of having things attached with the companies. So,
Okay, Ali, your voice is cracking, I can't hear you.
so there must be a reward to bring
Okay, your voice is cracking, Ali.
back. There will be a fresh
Please,
start.
please stop, your voice is cracking. So the possible benefits to the company could be for administration कि ठीक है, कंपनी को एक और मौका मिल रहा है जिंदगी का, ठीक है, जिंदगी जीने का. जाहिर है अगर वो बेच बाच के वाइंड अप कर लेते हैं तो एक बहुत डिमोटिवेशन भी हो जाती है और मतलब everything is wound up, खत्म हो गया सब कुछ, इतने साल की मेहनत, but there is one more chance, एक और जिंदगी जीने का मौका मिल रहा है, तो ये किसको नहीं पसंद या किसको अच्छा नहीं लगेगा?
हाँ, फिट है. Okay, perfect.
Can you hear me?
Yes, ma'am.
Yes, ma'am. Shall we read? Shall I?
Yes, continue. Now I can hear you. Only you can continue.
Okay. To the company. The company does not necessarily cease to exist at the end of the process, whereas liquidation will always result in the company being wound up. It provides a temporary breathing space for a creditor to formulate the rescue plan. It prevents any creditor applying for compulsory liquidation, and it provides.
यार मेरा इंटरनेट बहुत प्रॉब्लम कर रहा है, मैं एक्सक्यूज कर रही हूँ. चल गया तो ये क्या हो रहा है? चल रहा है, बंद हो रहा है, चल रहा है, बंद हो रहा है, ऐसे थोड़ी मैं क्लास ले सकती हूँ.
इतनी लंबी कहानी. God.
Sorry guys, my internet was getting disconnected, but
No.
I hope now it will.
No worries,
We
ma'am.
would. Our internet provider can also do the same. So nothing to say. Okay. Last was floating charge holders may appoint an administrator without reference to the court. It may also be the interest of the creditors to have a continued business relationship with the company once the business had been turned around. I guess there's a lot.
Okay, then to the members.
Hmm?
To the members, what is the benefit to the members?
To the members, okay.
They will continue to have shares in the
They are
company,
still the
right?
owners.
Yeah, the shares still exist. They will get
Still
the income
exist.
from the business. Yeah, so the share value is also the same. It will restore when the administration will work properly.
And to the creditors, of course, the
They will stay the owner.
creditors can still get their full payment back. They still have an
Yeah,
opportunity.
because now it's
Otherwise,
in
they
the
have
hand
to
of the
be-
court, so everything is official.
Exactly. Otherwise, they'll have to be satisfied with 1/4 or even less than that. So there's no point. This is not
Yeah.
motivating enough. But yes, this is motivating that after wait of 1 year, they can get a full payment back. Right. So I hope this chapter is clear and we have completed this chapter. I left a few paras in the middle. Just let me get back to it so that I can make it clear to you. Right. Proceedings for compulsory liquidation. What could be the proceedings? See, this is very technical and this is just facts. Okay, you can go through it and read it yourself. We have discussed a lot of things, and so most of the things are repetition. That's why I left it for you to read and get the facts on your
Yes.
fingertips. Okay. Secondly, effects of an order for compulsory liquidation. Of course, if compulsory liquidation is happening, what are the things that's going to happen? The official receiver becomes liquidator. The liquidation is deemed to have commenced at the time when petition was first presented. जब पहली दफा केस में फाइल होगा केस, तो it is deemed that liquidation उस दिन से शुरू हो चुकी है. Any disposition of the company's property and any transfer of its shares subsequent to commencement of liquidation is void. एक दफा आपने लिक्विडेशन शुरू कर दिया तो आप ना शेयर डीलिंग कर सकते हो, ना शेयर ट्रांसफर कर सकते हो, कुछ भी नहीं कर सकते. Fourth,
Everything is sealed. Yeah.
everything ceases. Any legal proceedings जो चल रही है कंपनी के अगेंस्ट, कोई और किसी और ने किसी कस्टमर ने केस फाइल किया हुआ है कंपनी के अगेंस्ट फॉर द प्रोडक्ट, फॉर द डिफेक्टेड प्रोडक्ट दैट हैज बीन सोल्ड टू हिम, वो सब पॉज हो जाएगा. व्हाई? बिकॉज द कंपनी हैज एंटर्ड इनटू लिक्विडेशन. The employees of the company are automatically dismissed. बताने की जरूरत नहीं है. Any floating charges crystallize हो गए, बस अब कोई गिरवी नहीं है, अब सब कोर्ट के अंडर है. ठीक है, अब सब लिक्विडेटर के कंट्रोल में दिया जाएगा.
Miss crystallizes mean to be under the charge of court
Crystallizes मतलब
or to be.
वो बस सीज हो गया ना, फ्रीज हो गया कुछ. अब वो ऐसा नहीं है कि क्रेडिटर आके अपना जो है वो इन्वेंट्री लेकर चला जाएगा. जो गिरवी रखे हुए एसेट्स
Okay.
वो क्रेडिटर उठा नहीं सकता.
Because floating charges always change with their current liabilities. So
Current
that's why
liability
now it is
also,
now it's not going to
अब
change.
तो सीन ही अलग है ना, अब तो लिक्विडेशन में चला गया ना, वाइंडिंग अप में चला गया, अब तो कुछ भी नहीं हो सकता.
So now there won't be any change in the charge.
इसको
Yeah, it's
ऐसा
going
ले
to be
लो
just
ना,
the
because see guys, company is treated as a separate legal
entity.
entity, right? It is considered to have all the rights and all the powers of an artificial individual. Okay. So, for example, a person like a teacher. I'm a teacher, okay, and the course is still going on. खुदा ना खास्ता कोई एक्सीडेंट होता है और मैं हॉस्पिटल पहुंच जाती हूँ, तो you guys cannot come and claim ना. It is a liability from my side to you guys to deliver. But if something like that happens, I go into liquidation, I go into the hospital bed, and I'm probably having the last days of my life. You can't come and claim and attack me and say, "Ma'am, आपने पढ़ाना था, क्यों नहीं पढ़ा रहे ये वो." You can't say that. Can
अभी
you?
नहीं जा सकती.
तो ये freeze हो जाएगा, right? Everything will freeze. Despite the fact you have liability, I am liable to you guys. Okay, so that's the same. Same goes with the company. Now, meetings of contributories and creditors, maybe you can go through it, nothing big. Okay, rest we have covered. In case you are getting stuck in any sentence or anything, I'm here to help. You can just drop your query in the group or in the class as seen fit. Okay, so okay, important बात, कब है आप लोग का टेस्ट भाई? टेस्ट लेना है ना, पार्ट ए
Sunday.
संडे को. Okay, all right, so are you guys preparing for it?
Not yet, ma'am, but
What is started?
Yeah.
Okay, can I include these chapters as well? Part A is completed, Alhamdulillah, and there are 2 chapters in part A, and these 2 chapters, part G and part H, this is also completed, done. So,
21 and
and
22.
So can we have the test of these 4 chapters?
I haven't studied H, so other than H, it's okay. I will study H.
Okay, we
Tonight.
can do one thing. Can I take I can put your test on Monday. So you have 2 days. You have today as well, Friday, Saturday, Sunday, 3 days. Prep yourself for these 4 chapters, and the test will be on Monday, inshallah. Okay. So
Okay.
in Monday's class, first you will be appearing for the test, and then we will be having the class. The timing would be shared with you. The test would be online. Okay.
So, ma'am, it's going to be at 11 o'clock.
The timing would be shared with you. Okay. We will share the timings. Okay. It can happen that in the morning I'll take
Maybe
your class, and
before-
maybe at night time I'll give you a test. We will
Okay.
discuss with mutual understanding. We can fix the time. Okay. Okay, then take care. Allah Hafiz. Have a good day.
You too.
Have
Thank
a
you,
great
ma'am.
weekend
Yes.
ahead.
Yes,
Okay.
finally.
Thank you.
Finally, weekend.
Okay, okay. Bye bye. Yeah.